It's a pleasure to have you. Thank you so much for being with us on Canary Wharfian. Before we kick off, can you give us a little bit about your background?
Sure, absolutely. Lovely to be here. Great to share some of the stories as well. Just as a background, um, I studied economics and finance at Bocconi, so had a bit of a background already into kind of what a finance career might look like from there. I did a few internships in investment banking, so started with actually Spring Week in Credit Suisse, then did a few summer internships at a few banks, and then basically proceeded to do an off-cycle internship, which is basically like a longer internship of like 6 to 8 months, I think. Um, had got a couple of full-time offers, decided to pick a bulge-bracket bank, and then went on to start my full-time in investment banking. Think was that was quite a ride, was quite interesting. But then after about two and a half years, decided that I wanted to be a bit more hands-on, a bit more operational, a bit more kind of strategic, but still stay on the finance side. So essentially decided to go more of an operator route. So joined a scale up in the finance and strategy role. It was a pretty interesting team that actually consisted of ex-investment bankers and ex-management consultants, essentially. So that was quite an interesting group of people that basically decided to get out of the long hours, but still had like a very good work ethic, very intelligent, like very driven. So it was quite an interesting kind of mix of people in that type of job as well. So I was looking after one of the kind of subscription parts of the business for about 2 years in the scale up. Decided to then try out venture capital on a very early stage side. So decided to basically go from a very kind of quantitative side of it, very numbers driven and very kind of Excel model based, to something that is very qualitative, kind of something where the numbers or the companies don't even exist. So it's all about kind of market analysis, idea analysis, people relationships. Spent just shy of a year there. Turns out didn't really enjoy being very kind of finger in the air and kind of started missing the numbers a bit. And then basically just came back to kind of scale up strategy slash finance where I'm basically at right now.
Amazing. It sounds like it's been an incredible adventure for you. I love how you've managed to break out of the mold, so to speak, by not going down the traditional banking, private equity kind of mold or trajectory. A lot of the people that watch Canary Wharfian are young people that are considering going into a career in finance. And I know that top of mind for a lot of these people are the long hours that are required to work in banking. Can you talk a little bit about that, what your experience was like? Um, yeah, like the long hours and how they impact your life in other aspects in terms of the relationships, your health, and
Sure.
all the other kind of aspects of your life, and whether you felt like it was worth making the trade-off.
Sure. I'll break this question down into kind of several steps. Maybe first one is whether kind of how you approach this kind of hours question more broadly. I think even before starting investment banking, you need to have like a very clear understanding that it is long hours, and it's not long in terms of 9 to whatever 8 or 9 to 9. Like it is really drastically long hours. A lot of the time it's like 19, 20 hours. Like sometimes you're just running on like 3, 4 hours of sleep, and it's not really like one-offs. It's more of like on an ongoing basis. I do have to say that I think the industry, or like a lot of people who I've been speaking to since I left investment banking, do say that in some teams and some banks, on average, it became a bit better since a few years ago. But again, it's still broadly like very much kind of exaggerated in terms of the hours you spend working. So I think even before making the decision of getting kind of trying to get into investment banking, you have to be very clear with yourself that this is something that you have to sustain on a pretty long term, and whether you want to do that and are is committed to, like, whether you're committed to do it kind of step. You have to make that decision for yourself even before you start trying anything. Second, in terms of the impact while you are actually working there, I think it's very different. The perspective of being in an internship versus being full time, I think that was quite different for me because when I was in my internship, kind of this was all new and kind of shiny. Working, I don't know, until 3 a.m. was a relatively on a short period of time, let's say like 2, 3 months, it was relatively easier to take mentally and physically. And I think that's where I was kind of making up my mind where I was like, yeah, absolutely, like this is fine. Like I'm sacrificing the hours and kind of the time spent with friends, family, etc. To actually make kind of some career progression, etc. But it becomes a bit of a different like mindset when you are actually doing it full time. I think it hit me a bit harder after maybe 6 months of full time where you realize that this is gonna be kind of sustained like that on a yearly basis rather than kind of peak and troughs. So I think even after you do the internships and even if you are familiar with how it actually works and what long hours are, the mindset is a bit different full time. So that's something to consider as well. That being said, coming to whether it was worth it, I think you have to, yeah, you have to kind of draw a line for yourself, whether what you're doing it for essentially. If it is a few years to kind of gain experience and get absolutely unique learning skills, I think it's absolutely worth it. Like for me, I wouldn't have changed it. I think it was definitely a good idea to actually start in investment banking because it teaches you a lot of things and it puts basically like a stamp on your CV essentially of like what type of person you are, what type of work ethic and kind of quality of the product that you delivered. So I think it's definitely like if you are prepared to do that for even like a year or two, I think it's definitely worth it. It is definitely taking a toll on even after just a year or two on your health, well, physical health, mental health. I think it is quite tough to kind of keep it up even for relatively shorter amounts of time rather than years long careers.
Did you know a lot of people in your cohort, so to speak, that stayed for, the long hauls?
Yeah, actually, the majority of, well, actually, in investment banking, purely in investment banking, I think there are maybe a few, let's say maybe like 10-ish% of the people I know. I think around maybe like 50 went to private equity from kind of my class, which is I think is a typical pattern. And then the rest actually went into more, let's say like more unusual things, which is actually becoming increasingly more popular with years. Like nowadays, I think even more people go to kind of non-private equity type of careers after investment banking versus let's say 10 years ago. This is obviously tied to kind of like tech market, other kind of investment banking well conditions as well, M&A as well. But at the same time, I think a significant amount stayed either in investment banking or private equity, which has I think similar hours. I'll kind of bulk them up into one category to be fair. It does get, I think something worth mentioning is that it does get better with time. So as you get more senior, you're obviously kind of doing a lot better hours per se. It doesn't really get better in terms of like pressure and having to be there all the time. Having basically, you have to be available all the time, even if you're not working at an associate or a VP or a director level. That basically means kind of answering emails or like kind of reviewing things. But at the same time, it's definitely kind of less hands-on hours than an analyst would do, especially as you get the hang of how the deals work, how the specific transactions and outputs actually work. And I think that's where the fastest learning curve is at the beginning of the journey, basically when you're an analyst. And then it's becoming a bit more streamlined as you become efficient or more efficient.
And in terms of the people that do end up staying in the banks and growing senior inside of them, based on your observations, are they able to live well-rounded lives, or did you find that they were pretty focused on work and kind of one-dimensional in that sense.
I think there are quite a few examples that I know that have more well-rounded lives. I think they put boundaries around it and they try to make it kind of a bit more uh compartmentalized, but at the same time it still means that the kind of the work compartment is probably a lot larger than it would have been for anyone else in the other career. But I wouldn't say that they're like spending 24/7 at work, but it's still, I guess, more doable or more rounded than it would have been in your like first or second year, where you literally spend 100% of the time in that.
Private equity positions itself as being easier, let's so to speak, in terms of the hours than investment banking and better paid. Um, I know you didn't go into private equity, but from your friends that did, can you comment or opine on that?
Yeah, sure. So I think there are three buckets that you mentioned, right? So hours, I think generally that they are slightly lower hours just because you are engaging kind of advisors and you are the one hiring investment banks on transactions. But at the same time, it does depend on what type of kind of private equity house you go to. If you are going for like a mega fund, you're still going to be working investment banking like hours. And I think people are prepared whenever they go into that, they are prepared for that. At kind of like mid-sized P firms, I think you probably do better hours. I think what I've heard from my friends is probably like eight to nine on like a kind of a more traditional day, but then you do a lot of travel. You do kind of a lot of, I guess, if you're doing deals, which is what you want to be doing, the hours are still longer than that. And there are kind of peaks and troughs, but they are a bit less pronounced in investment banking.
Do you have any advice for kids that are trying to get in, that are in uni, that are trying to get into investment banks and get full-time offers? Do you think it's best to go for an internship while you're still in school? Do you think it's okay to wait until you're graduating to try to get your foot in the door? What's the best way to do that? Is it through networking from friends, is it through colleagues? What are your thoughts?
Yeah, I think in my opinion, it's actually the earlier you basically try it out or get your foot into the door, the better. Obviously that being said, I mean you can only start that young. There are a lot of kind of programs right now that are similar to like spring weeks, your first year in uni, second year in uni, etc. So my perspective on it is the earlier the better because then you figure out whether it actually works for you or it doesn't. This is something you want to pursue for the future, and then you can start chipping at it because it's not you do need to have multiple attempts at like applications, at internships, so it gives you a bit more of a runway to actually try that out. That being said, again, I think you're not lost if you haven't gotten an internship in university. I think there are still other routes that you can kind of get into investment banking through, but at the same time, it could be beneficial for you to start early, but basically you're not done with it completely. If you're not there at uni, you could also do it after a specific job or kind of experience or master's or MBA. But I think it is important to start early. How I think you just need to be like really persistent in terms of figuring out what are the applications that are open, what are the types of things that you want to apply to. Try basically talking to as many people as you possibly can, either from your uni or from again just like cold calling or cold emailing a lot of people on either LinkedIn who are currently in the positions that you are interested in checking out. Again, speak to friends who are maybe like a few years down the line who have tried that. I think that makes all the difference, especially when you're trying to like differentiate different banks. I think it's very, very difficult to kind of understand that as an outsider. So talking to people is probably the best and easiest way. And honestly, like networking is king in finance and overall. So if people do see that you are kind of sharp, you are kind of keen on it and you are doing the work, like a lot of people will try and help you as much as they can with either like giving tips or trying to kind of help you out on the direction or trying to just answer questions. I think it's always useful.
Cool. Awesome. A question based on your experience, is there a difference, and I'll come back to the metrics between the bulge bracket banks? So like if we look at ours, let's say culture, it's kind of more of a qualitative, I would say, dimension or characteristic. And maybe long-term like growth prospects. Like, do you see a difference between, is it the same kind of thing, like Goldman versus Morgan Stanley? I understand that, some people think that, I don't know, BAML doesn't have as strong a brand as Goldman. But beyond that kind of like, I don't know, branding phenomenon, let's say, is there a difference to your mind?
I think the first of all, I've tried a few. I think this is why it was interesting for me to try a few internships to like figure that difference out. It was probably a bit more painful to just get that information in that way, but this is what I went for, so hey. So I think there is in terms of exit ops, if you are it all depends on what you're planning to do, and it's hard to say that. Obviously, if you're like trying to get into investment banking from uni, you probably have no clue. But in my view, you have to have a particular plan. Whether it changes, it for sure will change down the line. But if at least your plan is to stay within the financial services, let's say investment banking, private equity, then it matters a lot more what type of bank you're choosing and what type of team you're going for, industry, etc. I do want to say that I didn't want to stay. I knew that I didn't want to stay in private equity from the get-go, even before I started my full time. So for me, that kind of impacted my decision on which bank to go to and which team to choose. But if you are pursuing kind of private equity type of jobs, I think bulge bracket gives you a lot more of it gives you a better experience that kind of fits the mold for private equity in a sense. It's more of it's likely to have bigger deals. It's likely to have kind of bigger um cross-country teams as well, and cross-country or cross-continent deals as well, which are useful for private equity generally. And the teams are usually bigger. The dynamics are a lot sorry, are a lot different. So I think it is quite, I would say it's beneficial to go to a bulge bracket bank if you are planning to do that, to go to like a P mega fund or something. But at the same time, if you aren't, I would say pick something that you like based on culture. I think within bulge brackets, it's quite similar. It really depends on the team and it really depends on, I guess, the industry cycle. But I did see a difference in a, I guess, smaller bank or more of a boutique kind of culture versus bulge bracket. Whether you prefer that or not, that's, I think that there are a lot of details to it. But that also means that the deals are usually smaller. There might be more responsibility because of that. There are usually a bit more local and a bit more specialized. So if that's what you're trying to go for, that could be useful as well. Again, knowing that you want to specialize in a specific sector from the get-go is kind of difficult, but I think that's what will give you. That being said, again, if you are going or if you are planning on non-financial services careers, I think it's pretty much like people see investment banking on your CV, and to a lot of people, it means a very similar thing, whether it's a bulge bracket or a boutique.
Clear. And let's dive a little bit deeper into the cultural aspect of the difference between the bulge bracket banks and the ones that are like, I don't know what they're called, but like the Jeffries and the Rothschilds and and correct me if my pronunciation is wrong. I don't know how to pronounce it, but Moelis or
Yeah.
Moelis.
Well, it's yeah.
Yeah, Moelis. Yeah, so what's the key difference based on your observations from your professional experiences from a cultural perspective between the big players and the not so big players?
I think the team sizes are usually smaller. So whether it's better or worse depends on the specific people. I think it's a lot about the people. Then the second aspect is, as I mentioned, the deals that you will be doing. They're a lot more specialized and a lot more well, sometimes smaller most of the time. And third, I think it's probably about bulge bracket have slight reputation of being longer hours versus bulge brackets just because of the team size and kind of the level of responsibility and them basically boutique firms trying to compete with bulge brackets for either the fees or kind of trying to deliver it in a shorter period of time, etc. So sometimes that also mean you basically have to do long hours to try and outcompete the bulge bracket.
In the small ones, yeah.
Yeah.
Do you find that people are happier in the smaller firms or not really?
I think that's a very broad generalization. I wouldn't be able to say whether they are or not. Like I know people in both and both are suffering on different levels. So it really depends on kind of what you're trying to go for and what type of person you are. Honestly, the best way to kind of correct or solve for that is talking to people because even between the bulge brackets, like every firm is very different and it's very different depending on the time and depending on the team and depending on the head who's there at the time. So it's really like even probably when you're talking about a specific team from 5 years ago, it's very different to what it might be right now. So it's very difficult to say.
Yeah, no, that's 100%. Um, Question about artificial intelligence. I saw a video of, and I started my career in KPMG in the corporate finance division. I did a little bit of M&A work and I did mostly business valuation work. And I saw a video of a guy with a computer and he had an AI on the computer and he told the AI to download a company's annual report,
Mm.
pull out the financial statements and put them into Excel basically. And this AI did it. And I really got sort of not scared, right? Because I'm not in finance anymore, but it did make a very strong impression on me because I remember, especially when I was a young kid, a lot of the work that I was doing was just manual. You know, you have to find like the relevant numbers, for the financial statement numbers from the annual report of the company, and then you have to manually type them into Excel. Sometimes you have to do like lame stuff like that that nobody else wants to do, and you have to make sure that you have a smile on while you do it. And now I see that AI is doing that, and I felt like it was going to have a very strong impact on basically the work that investment banks do. Do you have a view? Do you have any sort of feelings about the subject?
Yeah, sure. I actually posted a video about this on my YouTube channel that I started recently, Life of Nat.
What's your
So
YouTube channel called? I want to find it.
it's called Life of Nat.
Life of Nat.
Yeah.
Okay.
So I literally started it very recently, like a few months ago, but I think I decided to address a lot of those questions because I was getting a lot of those about investment banking and VC and my kind of random career path as well. That's kind of how I kicked it off. It kind of grew from there, but let's see. So just coming back to your question. I think it's gonna be groundbreaking, honestly, for everything, not just investment banking. And I think a lot of careers will change because of that. I think we are still a few years probably away from it being as groundbreaking as we think. I think adoption, especially in like bulge brackets and more kind of output management will take a few years just because of regulation and how sensitive people are about data and kind of how it gets intertwined with kind of broader financial regulation as well. That being said, in workflows, I think that's probably where it's going to be most impactful because you're right, like a lot of the things that you're doing is sometimes like copy pasting, like a lot of data, etc. So that will definitely get streamlined. I think it's honestly so my one liner is it's gonna make your life better your life in terms of an investment banking analyst better just because you will have to do less menial tasks like copy pasting stuff or finding a random number in like a non-searchable document, which absolutely makes no sense. So I think that's going to improve for sure. I do not think it's going to improve the life in terms of hours that you will need to do, mostly for kind of three main reasons. First of all, investment banking is all about being very exclusive and kind of promoting itself as a very kind of selective environment. And it's most likely going to stay that way just because it's been like that for a while, and that's kind of a big point of it. So I think that's going to stay. It's also like very high pay. So when you think about compared to other industries, it's a relatively higher pay, and there needs to be some kind of justification for why it's higher, and like a pain factor is a big part of it. Like, why wouldn't you get paid a lot more if you can do kind of the same stuff in the same amount of hours, right? So you probably would like have increased competition, and then it'll level it out, you know. Then second point is also about kind of normalizing where the competition or like where comparable tasks sit. I think it'll reduce the hours that you take per task. Like again, like putting together like a research doc will probably on average decrease. But then what that usually means in investment banking, you are essentially just filling up the time with something else. So more projects, more work to do, more things on your plate. So I think that's probably what it's going to translate into. So in investment banking, the more productive people usually get. I think in general, like in any job, like the more productive you are, the more work you get. So it's not based on output, it's on based on kind of time worked, fortunately or unfortunately, but that's usually how it works. So I think you're gonna get a lot more done versus before. But again, the playing field will just level out. And if you think about it, in what 30 years ago, we literally had to do stuff on the calculator. So we're a lot and the hours were bad back then. Now we have Excel and all those fancy models, and yet we're still spending 20 hours in a day doing that. So I think that's pretty much gonna stay relatively similar. And then sorry, last point is it's all about the competition. Like the reason you usually have long hours is because you're trying to outcompete like other banks, other kind of service providers. So AI, like every bank is now working on their own kind of technology, whether they're building it in-house or they're outsourcing it. They're gonna have it eventually to probably a different degree, but then the level of competition will just kind of the baseline will increase, but then you're still basically competing on a new baseline. So it's still about kind of trying to overpromise, overdeliver, etc.
Yeah, great. Thanks a lot for sharing your thoughts. A lot of that makes sense. Before we wind down, because we're a bit limited for time, we got like 3 or 4 minutes left. I just saw on your YouTube channel you have some thoughts about not quitting.
Hmm.
It kind of jumped out to me because I overstayed, I feel like, in a role in a family office that I felt, after some time wasn't as dynamic as I wanted it to be. The boss wasn't sort of like doing the deals that he said that he would be doing, kind of disappearing for a long time, kind of not really compensating me the way that we had agreed upon from the get-go. And
Mm.
I didn't leave for a long time because I was scared, basically. It was a really like powerful family office. And that I struggled with depression because of that, because I like, I basically lost motivation. I'd go to work and there's
Yeah.
really not that much to do. So I feel like on my end, I made a mistake about overstaying for too long. I
Mm.
should have quit. And the title of your video is "Don't Quit." So I'm just wondering what your thoughts are on quitting. What's the right time to quit? What is your view on a kind of a toxic work situation? Um,
Yeah.
and yeah, that's the question.
Yeah. I think I'm after switching about what 4 jobs in the past 5 years, I think I'm a professional quitter by now. Um so I think I'm nailing down exactly those questions and trying that out for others so that they don't have to do it. So my view on it is, sorry, just to back up. So I stayed in a first job, I think in investment banking, I stayed for 2.5, 3 years. Oh well, 2.5 in a full time. The following job, I stayed for 2 years, then less than a year, and then switched to kind of the current one where I'm at. So it's been pretty interesting 5 years for me. So and all of that on a visa, so you can imagine all of the mess that goes around with it. So how I approach it usually is, first of all, I usually give myself about, I think, 6 months before I really decide whether this is something that works for me. I feel like it's very easy to judge in the first like few weeks, maybe like a month, whether you like it or not. But I think it's important to kind of, if the situation is not impacting your mental health like in a drastic way, I think it's important to stay for 6 months and see how that actually progresses, because whenever it's a new thing, you always have to adjust, especially if it's a different industry environment, etc. So I think that's quite important. Second point is, even if you are past that point of 6 months, I think this was especially relevant to me in investment banking. Like, is this job actually detrimental to your mental health? Because I thought investment banking really was for me. And even when I ask myself this kind of important question of, do I see myself in the job in 5 years? If that still sounds great in 5 years, but it's absolutely killing me, and I don't know how I'm even gonna get there, I think that's pretty much kind of starting to be a lot less feasible and look a lot worse. So I think you have to ask yourself those two questions basically. Do you see yourself in 5 years in that job or in that industry? And does it impact your mental health? If you're basically thinking that this is the career path that you want to take and it's not killing you, then great, like you stay in it, right? If it's a no answer, then you need to think about it short term and medium term. I think short term for me is if it's really drastic on a mental health situation, like you need to figure out any way to get out. So for a lot of like investment banking situations, I think that's kind of the case. I think in my experience, there are a lot more boundaries for that nowadays than there was about 10 years ago. There are a lot of people taking mental health leave for like a few weeks, even in investment banking industry or in the finance industry overall, which I think is a lot more not normalized. Sorry, I don't mean to say normalized, but it's a lot more common and people don't look down on it or look like it's less of an issue right now than it was 10 years ago, which I think is a big improvement. So it helps you to not make any of those rash decisions and tries to kind of help you to optimize for a better outcome, even if you need to leave in a short term. However, I would ask myself whether that is something that you can consider for the medium term of, can you learn anything else in your current job before leaving? I think there are a lot of kind of smaller tasks or smaller skills, even if you don't absolutely like the job, but there are quite important, and you can try and take everything that you can from the current situation. That's how I probably prefer to look at it, even if I decided that I want to quit. And then in the meantime, basically, it's about rebalancing your priorities in a sense. It's about trying to kind of carve out the time and think about the next step and not rush it in, while also kind of sustaining the pace at the current job where you try and hit all of those learnings before you leave, and kind of progress from there essentially. But I think it is a difficult situation if you need to, or if you want to leave immediately, especially if people are again like on a visa, on different like kind of financials, depending on the financial situation, different types of kind of decision making that they have to do around other factors. But I think it is important to give yourself the time to kind of think through it, take away anything that you can from your current job, and then try and kind of position yourself for the next step a bit better.
Amazing, Natalia. I feel like you're such a super positive person. I love your career journey, your story. Thank you so much for taking the time to share your thoughts with us on Canary Wharfian.
Thanks a lot for having me. Lovely speaking with you.
And good luck with your YouTube channel.
Thank you.